Hi, come on in.
We are Concrete Lion Pictures. And you're watching Taking Stock.
Let's rock and roll, folks. Welcome to the show. 2 minutes to go here into the close. Fears of AI disruption rattling the financial markets on this Thursday, February 12th. Let's kick off the broadcast by chatting with the Einstein of Wall Street himself, the great Peter Tuchman. Peter, we got a lot of selling pressure. We're going to finish at session lows down 1.6. What's going on even in the last 10 minutes here?
You know, look, we're getting huge volume for sale. And you know what? I think you're starting to see a broad-based sell-off, right? This is not, we've been sort of 50-50 advances versus declines all week. And I think people are trying to position themselves and figure out what the next move is. I think this is a lot of anxiety and impatience by sort of people who have been taking advantage of the AI rally and that fervor that's been going on for a while. They're not getting what they want as quick as they want, and they're getting quickly impatient. And so they're just selling off on that whole side. That's what's hitting tech right now. And so, you know, the rest of the names seem like they've got some support. Obviously, we had 4 days where the Dow broke 50,000 and hung above it, but today we broke down. So this is really a broad-based sell-off, and you're starting to see a little bit of fear in the market.
We have almost 2.5 stocks down for every one stock up.
We have not seen that for we have not seen that for a couple of days.
We almost got the bell, but what are you looking forward to the opening tape tomorrow morning?
Yeah. When you close at the low of the day, you've got to be careful about tomorrow opening up in some kind of a capitulation, because that's how this market works.
Peter Tuchman, the Einstein of Wall Street. Time for the closing bell. We'll be back with our market coverage after this. There you have it. 3 quick but 3 powerful strikes of the gavel here for the team from Veradermics. They will join us here on the broadcast in just a bit, but you heard there from Peter Tuchman a moment ago, capitulation to the downside, and Peter is always fond of pointing out, whenever we finish the day right about at session lows, look for a potential gap down into the opening auction tomorrow morning. And the thing is, the major market indexes started the tail of the tape this morning in positive territory. Heavy selling pressure around the 10, 11 a.m. hour, and that continued into the close. The S&P 500 down almost 1.6% on the day. The Dow down 1.3. For the first time, the Dow has logged back-to-back losses since January 20th. The New York Stock Exchange Composite Index will sell off 1.2. And as is to be expected for risk-off defensive rotation tail of the tape, the small caps, the Russell 2000 down 2% on the day. Our first guest joins us remote, Mr. Mark Hamrick, friend of the show, senior economic analyst at Bankrate. Mark, we'll talk mortgages, we'll talk key pieces of economic data, everything else on your radar. But first, I got to get your take on what you see for the tape here today, Mark.
Well, Peter's comments about the breadth of the market are pretty stunning and sobering. Volatility has generally been working to the upside, and investors have embraced that. Obviously, some correction in the market is probably overdue. At Bankrate, our focus is really for long-term investors. We don't have a trader mindset or mentality or even spend much time looking at that. But what I would say is one of the more interesting things to me that has happened here is we got the 10-year yield down to the lowest level this year. And that to me suggests that maybe something more may be fundamental to this rotation and potential a continued sell-off in the market. But for long-term investors, the majority of which are invested in the market for the purpose of their retirement, lower stock prices mean more bargain opportunities, and traders are one thing, long-term investors are another. You need to be right twice to time the market, and that's virtually impossible.
Yeah, it's an interesting note there on yields. The 10-year Treasury yield down. I think it was 7 basis points down to 4.1, the lowest it's been in a few weeks. So, but listen, it's all ends of the yield curve down. We're down today, Mark. That tells us there was at least some rotation into fixed income. What will you be following as we open up markets for tomorrow, the final trading day of this very busy week down here on Wall Street?
Yeah, I think you're right in that you do look for the potential for a sharper sell-off, and then we'll see whether we get the buy the dip mentality. There hasn't been anything that's changed radically economically this week. If anything, we had more reassuring data with the employment report. That obviously was stunningly to the upside, with the payrolls number, and sort of not much to see here with respect to the benchmark revisions compared to the preliminary estimate. And of course, the unemployment rate edging down ever so slightly. Obviously, what the market does is of keen interest to many Americans and high net wealth worth individuals as well, who've been powering a good part of consumer spending here.
Yeah, Mark, it seemed like the investors didn't really know what to make of that delayed January jobs report. It kind of seemed like it had a little bit of something for everybody, something for the Hawks, something for the Doves. Obviously, we made a lot about the big downward revisions year over year from the spring of 24 to the spring of 25. Any big surprises in that report to you? And of course, this sets the stage for CPI inflation print, which we will get tomorrow morning around 8:30.
Well, I think if anything, the surprise is the consistency of lack of performance in sectors that we see on an ongoing basis, where you've got healthcare, social assistance really doing the heavy lifting for jobs creation in this country. That's obviously within the context of 5 million monthly hires a month. But I think perhaps the more significant takeaway for more sophisticated viewers of the data as well as market performance is there can be no urgency at this point on the part of the Federal Reserve, I think, to want to reduce interest rates. It's just 1 month's data, but getting the unemployment rate back down to 4.3%, you're not necessarily at maximum employment, but when we know supply and demand of labor have both been being reduced, and we have the unemployment rate still going down to 4.3%, I think that's fairly remarkable. The resilience of the job market, even with the somewhat alarming Challenger Gray and Christmas data we saw, where job cut announcements were the worst since they've been tracking and hiring intentions were the worst since they've been tracking. But we haven't seen those job cut announcements filter into the new claims as we saw just today, really sticking in a range over the past 3 years. Yeah, the I should say the CPI is next up. That'll be interesting. There is a tendency to try to pass through some price increases every January on the part of some kinds of firms, insurance being among them, or subscription services. If anything, we should see, headline and core getting down to 2.5% year over year.
All right, Mark Hamrick, we've got to leave it there. We'll talk mortgage rates next time you're on the show. Thanks for kicking us off, and we'll follow very closely that CPI print into tomorrow morning. All right, we'll now bring you the latest. Yeah, we're going to divert from the markets and talk big sports for just a bit. More than $250 million in total trade volume on this particular event contract right now. OKC, 36% odds. They are the odds-on favorite to repeat as NBA champs, pardon me. Denver Nuggets at 13%. The San Antonio Spurs, the Detroit Pistons, and the Cleveland Cavaliers rounding out the top five. And despite winning the in-season NBA Cup, my beloved New York Knicks, only 6% odds to become NBA champions. The NBA Finals tip off on the night of Wednesday, June 3rd. Hopefully game one will be held right here at MSG. All right, we'll take a look here at two NYSE notables, and this really tells the story of both sides of the same coin. We got consumer staples and discretionary. We'll start with the former, up 17% from mid-January. The most weighted names in this ETF, it's Walmart, Costco, Procter & Gamble, Coca-Cola, and Philip Morris. When you have risk-off rotation, more defensive days, you tend to see outperformance from consumer staples, trading at an all-time high today, the third strongest sector so far this year, behind only energy and materials. And Howie will go on this way. We'll take a look at discretionary, and this is what happens when you get the risk-off days. The staples go up, discretionary goes down almost 1.4. These are names like Amazon, Tesla, Home Depot, McDonald's, and TJX. The companies you might be willing to spend a little bit more money on of your discretionary pay if you can afford to do so. The sector is down now about 3% on the year. The only two sectors performing worse than discretionary, tech and financials. All right, earlier this week, FinTech TV's very own lead anchor, Remy Blair, sat down with Solana Foundation Head of Product and Digital Assets, Catherine Gu, to discuss the evolution of digital payments and blockchain infrastructure. Take a look.
Welcome to FinTech TV. The Solana Foundation was created to advance the adoption of decentralized technologies as a public good. As the original promise of the internet faces increasing centralization, decentralized networks do offer a path forward. The Solana Foundation is focused on expanding the Solana ecosystem by building permissionless infrastructure designed for global markets. Well, joining us today is Catherine Gu, Head of Product and Digital Assets at the Solana Foundation. Catherine, great to have you here. Thank you so much for joining us. Well, I understand that you spent 6 years at Visa before transitioning to the Solana Foundation. So tell me about the catalyst that convinced you it was time to leave TradFi payments and to help lead the Solana Foundation.
Yeah, thank you so much for having me. It's great to be here. For sure, I think I've learned a ton of stuff around payments, but also just around digital, like money movement in general while I was at Visa. But I think what's really clear is this trend, this transition, right? As the entire industry is looking at innovation and technology and what it can deliver in the future, which is 24/7, always on global infrastructure. So what is really clear to me and what attracted me to Solana is this notion of internet capital markets. I think those three words capture the vision as well as kind of, what's ahead very, very accurately. And it is true that as we're thinking about what is needed for the financial market infrastructure, there's no reason that you have to have trading hours during the market time and off the market time because market should be 24/7 and therefore money should be moving all the time. And so thinking about blockchain, what can really deliver in this sort of new digital AI age, I think is a really important thing to think about, like fundamentally what new infrastructure can help to create for the ecosystem.
Yeah, and Catherine, building on what you just said, how do you envision Solana building a new financial infrastructure that remains accessible to everyone and not just the tech savvy crypto audience?
Absolutely. I think number one thing is about liquidity because to create any successful network, you have to have a very rich but also diverse liquidity. So I think a lot of the times people focus on, TVL as a metric, which is total value locked. It might not be the most useful type of metric to look because you might have a massive amount of wealth, let's say, or assets being locked on a particular network. But if they're not moving, i.e., if they're not liquid enough, then it doesn't really deliver value and therefore like deliver the right use cases for the users on top of those networks. So what I see on Solana is actually it's both very liquid, it has a very good depth, but it's also very high in terms of transaction volume, and that's what we care about. And I think, what's important as thinking about having a neutral blockchain infrastructure is that it can serve for all type of users, right? Whether you're a gaming kind of company or whether you're a retail user or like a financial institution, very diverse and different needs and product requirements. But the important thing is can you all transact on the same neutral blockchain? And that's really important. And I think Solana has the features that can really cater for all of these different types of use cases.
Yeah, and as the new year gets underway, a lot of focus has been on institutional adoption. So, what do you see as the most critical lesson for major payment providers that are exploring blockchain today? And what is the one piece of advice that you would give to institutional leaders listening in right now?
I having been at Visa for the past almost 6 years, I definitely have seen a lot in terms of the sort of that learning curve, so to speak. Because at the very beginning, when crypto everything existed, I think we really see this as a wild west, right? It is not really serious or anything for payments. But I think what's really important, especially last year, as everyone knows, that regulatory environment change is a very important tipping point. I think nowadays we start to get a lot more kind of convincing data to see, for example, how much stablecoin is being used for real payments. It's not just wash trading, but for real payments, whether that's in B2B international cross-border payments or in retail B2C or like even peer-to-peer sort of like cross-border remittance flows. And that's really important because I think for TradFis, they need the real signal to know that there is a real business opportunity out there. It's not just some random, innovation or research that might just die after a few years. Like this is here to stay and it actually brings new revenue generation for the businesses, which I think is ultimately the most important signal that for payments company, for just financial institution in general, that's what they're looking for.
Well, Catherine, thank you so much for joining us today. I appreciate your time and all of your insights.
Thank you so much for having me.
All right, welcome back to the show. You are watching Taking Stock live from the iconic trading floor of the New York Stock Exchange. Our next guest joins us right here at the FinTech TV booth. This is Evgeny Gayavoy, the founder and CEO at Wintermute. Thanks a lot for joining us.
Thanks for having me.
And not only making your Taking Stock debut, but visiting us here at the New York Stock Exchange for the first time. It's awesome to have you.
Yeah, no, always wanted to visit.
Okay, you are much smart. I love talking with guests who are objectively far smarter than I am, especially on all things cryptocurrency. So, we've been tracking Bitcoin coming off those 125, 126 levels in October. Obviously, the big liquidation event on around October 10th. How are you approaching its current pricing levels at 66 and change?
I mean, it's definitely an interesting change, market dynamic wise. What we basically see on liquidity side is it's a big structural change. It's driven a lot by ETF flows. It's driven a lot by basically what we call TradFi exchanges. Well, basically NYSE, Nasdaq. So basically everything that happens in the ETF space now affects crypto way more than just traditionally on like big centralized exchanges like Binance or Coinbase.
Yeah. Why did this cycle break the usual seasonal patterns? And to any degree, how have you been able to look at it the last few months?
Yeah, I mean, I've never was a believer in a cycle, like basically those like 2-4 year cycles that people like to believe in. I think what's interesting about this particular move is we know the technology works, but it's very much decoupled from token prices. So we see a lot of innovation in tokenized securities. We see obviously stablecoins picking up and going full steam ahead, but we don't see it being reflected in token prices, which is very different from all previous cycles.
How big of an impact to further drive down the price on some of these things has been the conversation over liquidation and deleveraging, which as we've talked about with other guests, hey, it's all well and good when these asset prices are riding up, but man, oh man, once it starts to come down, no one wants to catch that falling knife.
I mean, it's good and bad, right? I think a lot of this pain has been front-loaded already, so I think it starts to be a lot more interesting. Like the crypto prices start to be a lot more interesting compared when Bitcoin was at 120K. Mm-hmm. Like now the risk reward is starting to be here.
Do you have any sense on where crypto goes from here? I know that's like the most important question in the crypto markets these days, but people are looking for a good faith entry point. They thought maybe we flush some of the leverage out of the system. Okay, we go to 75, now we go to 70. Now we're going a little lower to 65, 66. You have a sense on where this thing goes?
I would say not yet. Like what I can share is basically via our OTC desk is we see a lot more basically two-sided flow recently, which is opposed to basically only selling flow a week ago, like a month ago. So it starts to be a bit more balanced, which gives a bit more hope for like reversal, but it's still too early to say.
What do you say to the average investor who is watching the crypto majors fall and saying, wait a minute, I thought this was the time for institutional adoption. I thought this was the time for members on Capitol Hill to pass much needed legislation. Why is this happening at the same time as those things?
I guess time will tell as well, but I mean, first of all, we haven't seen this legislation passed yet, so I think that's a pretty big catalyst potentially to come and help the prices. Secondly, crypto needs to do some soul searching. Crypto needs to dig deeper and understand, okay, where does the value capture is coming from? Are the tokens going to be solution, or is tokenized equity is going to be solution? And maybe a lot of tokens don't deserve to be here in the first place.
Evgeny Gaevoy, founder and CEO at Wintermute. I know you're leaving New York in the not too distant future, so thanks a lot for taking some time to see us down here at the show and making your first trip to the New York Stock Exchange. Come back anytime. It's great to have you.
Sounds great.
Don't go anywhere. Much more Taking Stock coming up from the big board after this. Welcome back to the show. You're watching Taking Stock. Reed Wallman joins the show now, the CEO at Veradermics. Also rang the closing bell down here at the big board and now joins us here on the broadcast. Great to have you. Congratulations on doing the closing bell.
Thank you. This was the most fun day. The New York Stock Exchange is just electric, and being here for the close is amazing.
And now this is your new home, because for people who are unfamiliar, you just priced the stock and started listing down here at the big board about a week ago, maybe 6 days or so ago, and so far it seems as if it's been going quite well for the stock.
I was going to say, we had the best single day of IPO trading in biotech since 2021, and we're up about 160% since we started trading last week, so it's a very exciting time.
Howard, if we can get a quick shot of the Veradermics board here over my right shoulder, we see the stock is up today 0.9%. Now, you and I are down here. We're looking up at this big board. There's a lot of red. Across the broader indices, but your stock tend to do very well. What have you seen in terms of early, especially retail investor interest in the stock?
So I can't speak to who is buying the stock, but I think there is a lot of value here, given that we are in a late stage clinical trial, meaning we have phase 3 trials ongoing for what is positioned to be the first oral treatment for pattern hair loss for females ever, and the first oral treatment for males in 30 years. So I think there's a lot of excitement, given that is the single most prevalent chronic dermatologic condition in America.
What type of interest are you seeing from people out there for these type of core products?
Yeah, so I mean, for us, everything is about the hair, and I think that we've seen that, right, there's 80 million people who have pattern hair loss in the US, that's 50 million men, 30 million women, and that for those individuals, right, only 9% are satisfied with treatments that exist today, and so the ability to have put out phase 2 data, which we did prior to the IPO, that demonstrated fast hair regrowth as early as 2 months, consistent hair regrowth in the vast majority of patients in the study, intense hair regrowth that was measurable using objective metrics while maintaining good tolerability and the convenience of oral administration. There's a lot of enthusiasm that comes on the heels of something like that.
Now, if you don't mind me saying, game recognized game, you got a killer head of hair yourself there, man. But if I were a patient, I were interested in learning more, kind of walk me through the early step-by-step process. Am I going directly to my primary care physician? Are there other kind of regulatory hoops for me to jump through to be able to take advantage of products like yours?
So right now we are in phase 3 clinical trials, and actually there's breaking news from this week, which is that we just fully enrolled both of our male phase 3 studies. So if you're a male watching this who wants to participate in a trial, I'm sorry, these ones just closed, but we have 1,000 people in these trials in the US. We'll read out the first of those in the first half of this year, the second of those in the second half of this year. But if you're a female with pattern hair loss, we do have an ongoing phase 3 trial, which is the first ever phase 3 study for an oral treatment for female pattern hair loss. If you want to learn more about that, you can go to phlstudy.com, so patternhairlossstudy.com, where we continue to recruit for that study.
I want to make sure I get this right. That might be what you were just referencing. VDPHL01. I don't work in biotech. I don't work in biosciences. I don't always know the shorthand vernacular for these things. What is that, and where are you in the process?
So VD is Veradermics, okay. Pattern hair loss is the PHL, and then 01, hopefully it's the best, right? So we're very excited about that.
Okay, that's awesome. As you began trading down here at the New York Stock Exchange, ticker symbol MANE, talk about what it's like for someone in your position. I mean, the entire world of the broader financial markets, the system of capitalism, I call this place the Yankee Stadium of Finance. And now your company is a part of that incredible history. What has just the last week looked like for you?
So I think anyone who's ever been on the trading floor immediately knows this is a moving place, right? You feel like you are a part of history, and for us, right, the credibility, the coverage that comes with being on the New York Stock Exchange is extremely exciting, and I think you'll see more biotech companies like us, given there has been a dedicated investment by the New York Stock Exchange into biotech.
I only got about 30 seconds or so left. Talk to me some of the metrics, how you measuring success here in your first year as a publicly traded company.
For us, it's all about the trials, it's all about clinical data. So again, right, pattern hair loss transcends being aesthetic. This is a deeply personal, deeply psychological condition that is almost universal. We have phase 3 trials ongoing that position us to have the first oral treatment approved in males in 30 years, the first oral treatment ever approved in females with pattern hair loss, and ultimately success comes with clinical readouts, the first of which will occur this half of the year, the second of which will happen in the second half of the year, and it's just very exciting to work on a problem that either everyone has or they know someone who has it.
The ticker symbol is MANE, appropriately so. The CEO himself, Reed Wallman, the company Veradermics, the exchange, the one and only NYSE. Congratulations on all the success. Thanks for being on the show.
Very much appreciate it.
Really good to have you. Don't go anywhere. Much more Taking Stock, including the latest from Scarlett Sieber at Money 2020 coming up after this quick break.
Welcome back. I'm Scarlett Sieber with Money 2020, and on this week's edition of Jargon Translator, we're going to be decoding a term that started as a typo and turned into a whole lifestyle. Hole's quite there. Huddle. Ha, I'm just kidding. Hold. Yes, HODL. Not a new dating app, not a Gen Z slang for hugging. It's crypto speak for hold on for dear life. But let's rewind. It all started back in 2013 when a slightly tipsy Bitcoin investor posted in a forum. We've never done that, any of us, right? I am hodling. He meant to say holding, of course, as in not selling his Bitcoin, but the typo stuck, and just like that, the meme was born. Because in crypto, if it's not a little chaotic, is it even real? So what does hold actually mean? It's a rallying cry of crypto believers who say, markets crash, prices dip, doesn't matter. I ain't selling. It's not just a strategy, it's a vibe. It's diamond hands. It's I bought Bitcoin at 60K and I'm still here. It's I believe in the tech, not just the price. It's basically the crypto version of I'm in my long-term relationship era. But here's the nuance. Holding isn't just about stubbornness. It is also about conviction. Crypto markets are volatile, like roller coaster on Red Bull volatile. So holders are the ones who zoom out. They're not day trading, they're not panic selling. They're playing the long game, betting that Bitcoin, Ethereum, or whatever coin they love will moon eventually. Let's be real, holding is not for the faint of heart. It's not financial advice, it's not a guaranteed win, it's a mindset and sometimes a coping mechanism. Because when your portfolio is down 70% and you're still tweeting, hold, you're either a visionary or in denial, or maybe somewhere in between or a little bit of both. Next time someone says, I'm holding, HODLing, just know they're not frozen, they're not confused, they're just riding that crypto wave, eyes on the horizon, hands off the sell button. So that is your jargon translated for today. Back over to you.
CPI inflation print set to cross the wires tomorrow morning at 8:30 a.m., 1 hour before market open. We'll also get results from Moderna and Wendy's. Thanks for watching. We will see you again tomorrow.